Welcome to the 1515, brought to you by the regulatory legal experts at the Maples Group. Here, you will learn more about the latest developments in the regulatory laws of the Cayman Islands on the 15th day of every month.
Welcome to the latest edition of our 1515 Regulatory Podcast. My name is Chris Capewell. I'm a partner and global head of the Regulatory and Financial Services team here at the Maples Group. Joining me today is Alex Howard, a partner in our funds team, Anthony Mourginos, a senior associate in the regulatory team, and our lead PSL in regulatory, Jen Parsons. Anthony often refers to himself as Donnie, so if you hear me and others talk about Donnie, that's who we're referring to. Please note that the contents of this podcast do not constitute legal advice and should be taken as a general update only. And then, I think I've said this a lot of times before, but just some light housekeeping items to cover. If you're listening from your usual podcast app, you'll find any resource documents and speaker information in the description. And if you've clicked on the media link sent to you via email, you can find this information in the notes section. Please, of course, don't forget to subscribe to us and like on Apple Podcasts or Spotify. Okay, let's get started. First off, big news here in the Cayman Islands, effective 31 July 2024. The revised Beneficial Ownership Act is in play. It's here. We'll spend the majority of today's podcast talking about beneficial ownership. But before we do that, there are some other developments just from the DITC that we wanted to cover off. So Jen, I'll hand over to you if you can talk about those.
Yeah, absolutely. Thanks very much, Chris. Cayman financial institutions have just passed one relevant deadline for the year, which was the 31st of July, when we would have had the 2023 CRS and FATCA reports due, as well as the 2023 CRS filing declaration, but of course, no rest for the wicked. We want to just highlight that Cayman financial institutions should bear in mind the upcoming AEOI filing deadline, which is going to be with respect to the CRS compliance form for 2023, and that will be due on the 16th of September of this year. Now, normally it is the 15th of September, but that date for 2024 is a Sunday, so there will be an additional day. The other thing that we want to talk about a little bit is the Department for International Tax Cooperation, or the DITC, has also recently published updates of several of their guides. The Economic Substance Practice Points were republished in June of this year. Similarly, the Economic Substance Notification User Guide, also republished in June. And then finally, the DITC Portal User Guide was republished in July of this year. So with respect to the republished guidance that's out there, or these various guides, there are several noteworthy changes that we want to highlight for everyone. Some of those are with respect to the Economic Substance Notification, or ESN filings, and then some would be with respect to the Economic Substance Returns, or just ES returns. With the ES returns, just bear in mind that those are only going to be filed by relevant entities that are carrying on relevant activities, which would be distinguished from the Economic Substance Notification, which instead would be filed by all entities. So what are these changes that we want to draw attention to? Well, let's start with the ESNs, or the Economic Substance Notifications. So there are some data field changes that are to be highlighted. Previously, when you were entering data, you would have just entered the relevant ESN year itself that you were going to input data for. A little bit of a change there now, because now you're going to need to input a start date and an end date. And then what will happen is the ESN year will automatically populate on the basis of those dates that you would be entering. Really, it's the start date. I suppose that is more of the new wrinkle there. So it may be the case that if you're working with a corporate service provider or other filer that assists you, that they're going to be looking for this new data point in order to make your filing this year. Similarly, because things have changed and now partnerships are in scope for economic substance, that's something that would have changed prior to this year. But having said so, we've now got a situation where there's always a lag in terms of those filings. So we are seeing some new data points that are going to be required now with respect to partnerships. So with the economic substance notification, you've got data fields where they're going to be looking for the identity of the general partner of the partnership, as well as whether that general partner is carrying on the same relevant activity as the partnership itself, or whether, of course, it could be potentially carrying on some sort of different relevant activity separate and apart from the activities it does as general partner for the partnership. Finally, with respect to the economic substance notification requirements, the DITC's bulk upload form has changed to accommodate these new data fields that we've just mentioned. That wouldn't be so much of interest, I guess, to our listeners who, if they're doing an individual filing, that's something that would be more commonly used, of course, by corporate service providers that would be inputting data with respect to a number of entities. So that's everything with the economic substance notification. And then just turning to the economic substance returns, a couple of things to be aware of there as well. Where there's a change in relevant activity for a given year, and the entity in question has passed the point for deadlines for economic substance notifications, so that you can't easily go in and make a change to what it is that you're reporting with respect to your relevant activity, you're now going to be required as a mandatory item to provide the DITC with an explanation of facts and circumstances surrounding that particular change in relevant activity, as well as to upload supporting documents around that particular change. Now, having said that, that's something that certainly we were always advising clients prior to this time to use extra data fields for other information that they would supply in order to give this explanation to the DITC. But now, just to be aware that that is a mandatory item going forward, that will have an appropriate field or fields associated with it. And then the final thing to point out with the economic substance returns is that now there's going to be a requirement for all relevant entities other than holding companies to complete the directed and managed section of the ES return. And that is regardless of the entity's level of relevant income. So what used to happen is if you were filing a nil return previously, you wouldn't have had to complete this particular directed and managed section of the return. It would have kind of blanked out based on you indicating a relevant income of 0. Going forward, though, where you have a relevant entity, regardless of its level of relevant income, it will need to complete that particular section. The only exception will be for holding companies. So those are the main things we wanted to highlight coming out of the new guides that have been released and the new things we're seeing. The only other thing I would mention for those who are particularly eagle-eyed, looking at the DITC website, they previously used to include sample forms of filings for the ES returns. We see that they've pulled the forms that they used to have on there, so I think we can expect those perhaps to be replaced sometime in the future before those filings are likely to happen sort of later in the year. And at that time, you'd expect, I think, to see these new categories and data points and so on being reflected.
Thanks, Jen. Very much appreciated. Detailed report as usual on the DITC. Now over to the substance of the podcast, excuse the pun. Donnie and Alex, lots to talk about here on beneficial ownership. Donnie, I guess if you can kick off just with a general update about what's been happening, and then Alex, is going to be parts here for you to chime in from an investment funds perspective. So Donnie, over to you. Do you just want to give us a general overview and update of the recent happenings in Beneficial Ownership Transparency Act, or BOTA as we call it? The regs have passed, the guidance is here, it's all go, is that right?
Almost. You're certainly right. As of 31 July, we had the Beneficial Ownership Transparency Act commencing. We also had final form of the Beneficial Ownership Transparency regulations being passed. We also had our accompanying guidance on complying with beneficial ownership obligations being released and published by the ministry. So we have all the legislation, we have the regulations, and we have a guidance note, and we have confirmed that the regimes commenced from 31 July. At the same time, what has happened is that the old beneficial ownership regime has effectively fallen away at the same time. So you might recall from some of our previous podcasts where we touched on BOR, what was the intention was that there would be a phased approach of the old regime and the new regime. Certain aspects of the old regime would continue for a period of time, whilst the new regime was phased in over a corresponding period of time. That changed on the 31st of July. So instead of that, what we had is the new regime kicking in immediately and the old regime falling away on the same day. At the same time, though, rather than having a regime commence immediately and then having every entity in the jurisdiction effectively unable to comply from day one, Ministry have confirmed that there is a period of time in which there will be no enforcement under the new regimes. So although the old regime has fallen away, we have a Beneficial Ownership Transparency Act having commenced, there will be no enforcement until early next year.
Cool. So delay in enforcement, big point. Key changes. Alex is on the line. So Donnie, before you crack on, because I know you want to talk about these, but Alex, just from a fund perspective, what are the key changes that we need to be aware of? And just to you and Donnie, I know there's lots to discuss. If we can just keep it within a minute or so for each so we don't run over, that'd be great. So no pressure. Over to you, Alex.
Yeah, thanks, Chris. There's a couple of points to note on the fund side. Principally, the main issue that arises right at the front is the change to the vehicles that are in scope. Obviously, previously, it was only corporates in scope, and now we're bringing into scope exempted limited partnerships. Obviously, that has quite a big impact on investment fund structures, given that most private fund structures are structured as an ELP. Previously, they would have been out of scope. Now we have to obviously consider compliance for investment funds structured as partnerships. The other big point is the removal of the exemptions. There were obviously a litany of exemptions under the prior regime that would have been available to investment fund structures, both having regulation under one of the regulatory laws, such as the Private Funds Act or the Mutual Funds Act, but also being managed and arranged and operated by an approved person or being a GP or a subsidiary. And those prior exemptions have all fallen away, and so there are no exemptions now. But that being said, there's this new alternative route to compliance, a catchy route, and that's going to be available for a certain specific set of vehicles, such as those that are listed on the CSX or an approved stock exchange or a subsidiary of a listed vehicle, a vehicle licensed under a Cayman regulatory law, or a fund registered with SEMA, such as a private fund and registered under the PFA or a mutual fund under the Mutual Funds Act. And this alternative route to compliance is going to relieve the requirement to report on beneficial owners and establish a register. And instead, it's just going to require limited required particulars and the appointment of a contact person. That contact person would need to be appropriately licensed and registered in Cayman, and that person would provide any beneficial ownership information that's requested by the registrar on a 24-hour basis. For example, Maples would be able to provide that as an appropriately licensed and regulated person in Cayman, and Maples would be on register noted as the contact person for the fund, relying upon that alternative route to compliance. We're obviously early on in the stages of working through, approach to compliance, but we have discussed with a number of our investment manager clients, and we understand and expect that this alternative route to compliance by fund vehicles is going to be quite an attractive route. But it is probably worth noting that it is an optional route. So even a vehicle that has, even an investment fund that has the ability to rely upon that and elects to rely upon the alternative route to compliance, they don't necessarily have to. They can still produce and establish a register and report accordingly. And then a couple of side points to note. The alternative route to compliance, unfortunately, isn't going to be available for those single investor funds that are able to avail themselves of an exemption from the Private Funds Act or the Mutual Funds Act. So if you are a single investor fund that isn't registered with SEMA, fortunately, you won't be able to rely upon that alternative route to compliance. And similarly, at the end of the life of a fund, if we're going to deregister from SEMA, we will just need to make sure we're popping into place a register and appropriately reporting just in that intermediate time between deregistration from SEMA and the dissolution. It's those key points really from a fund's perspective that we need to be thinking about from a compliance perspective.
And Alex, can you just track us through what the intention is here with the client reach out, given obviously there's going to be thousands of entities impacted, not just by Maples, but all service providers on Ireland?
Maples will be reaching out to their clients with spreadsheets on or around the 1st of September 2024. And that spreadsheet will be the way in which we'll be gleaning the appropriate information so that we can ensure we're in a position to have those vehicles in compliance with the new regime.
Great. Thanks, Alex. I'm sure fund clients will be interested in that. Donnie, outside of the fund space and more broadly, any other key points that you want to talk about?
Yeah. So a few things coming out of the passing of the regulations, which was the piece of legislation which we were waiting on, as well as the guidance notes, and a few key things. And this kind of piggybacks off what Alex was just talking about in the fund space as it relates to subsidiaries. A point we discussed on one of the prior podcasts was it wasn't quite clear on the face of the law and the version of the regulations that we had at the time how a subsidiary of a regulated fund would actually report for the purposes of their beneficial ownership register. As Alex just said, a subsidiary of a regulated mutual fund or a private fund cannot take advantage of the alternative route, so it would effectively be treated as a normal in-scope entity, assuming, of course, it's a Cayman Islands legal person. The thinking at the time was that, well, if that subsidiary needed to report and establish a register, well, what then is the benefit of the alternative route to compliance if you were required to nevertheless look through and pass the parent investment fund? The guidance clarifies this point by making clear that where you do have a subsidiary of a Cayman Islands vehicle, such as a regulated mutual fund or a private fund, that subsidiary would only need to report its reportable legal entities. And reportable legal entity is another Cayman Islands legal person. So in effect, if you have a Cayman Islands entity sitting above another Cayman Islands entity, that bottom Cayman Islands entity would simply report its parent and stop there. There's no need to look further past that reportable legal entity, the parent Cayman Islands entity. So that simplifies the reporting process quite substantially, not just for funds, but I think it's particularly relevant in the fund context, given the partial alternative route to compliance that is available there.
Donnie, I think that's going to bring, if I can butt in from an investment fund's perspective, I think that new clarity in the latest guidance is really going to bring a lot of comfort to our investment fund clients. I think I understand Maples was quite instrumental in getting that clarity and comfort in the guidance. But yeah, it will mean that when we're looking at downstream vehicles of registered investment funds, we will just be looking at the next relevant legal entity in the chain rather than having to look up through those investment funds to the beneficial owners of those investment funds. So it is a real comfort to our investment fund clients.
Indeed. The other thing coming out of the guidance, which has been really good to see, there's been an expanded consideration and some further guidance on who may be a senior managing official. Now, as we know from our prior podcast on the BOR regime, a senior managing official comes into play where a relevant legal entity doesn't have any beneficial owners or is unable to identify a beneficial owner. We can't report a nil return anymore. What we do need to do, what that legal entity would need to do, is report a senior managing official. The guidance provides some additional context as to who might be a senior managing official. Obviously, in the context of a company where you have a board of directors, it may be fairly obvious who may be a senior managing official, but even in that context, the guidance does provide a little bit more detail. For example, where you do have a board of, for example, 3 persons, where one board member may have additional voting control or additional power in that regard, the guidance suggests that it's that person who should be named. Where you have an equal board, if you will, the requirement is just to pick one of those people. The guidance also provides a little bit more context where, say, for example, in a partnership where you don't necessarily have a board of directors or senior managing officials, and you may have a general partner who itself is another partnership. What the guidance suggests is that you would look and find an appropriate senior managing official based on the structure and the operations of the entity. So it may not necessarily be a senior managing official of the GP. You may have to ultimately look further up the chain until you find an appropriate person in that regard. So that's some useful guidance there. The guidance also provides more context around what a authorized contact person in fact needs to be able to report to the registrar. Now remember, an authorized contact person is the name of the person identified by a regulated fund if they are applying the alternative route to compliance. That authorized contact person is supposed to report information to the registrar if asked, if a request is made by the registrar to deliver certain beneficial ownership information. It wasn't quite clear on the face of the law what that meant. What was the scope of beneficial ownership information? The guidance makes really clear. You would, in fact, just pretend that that mutual fund or private fund is properly in scope of the regime and pretend that it was to establish a beneficial ownership register, so a normal in-scope entity, and you would need to identify that information. So that was really good to see that come out. The other thing which was brought out in the guidance is the treatment of trusts and trustees in the context of identifying a beneficial owner where a structure involves a trust. The guidance makes clear that it is possible to identify a corporate trustee as a beneficial owner. Where that corporate trustee is a Cayman Islands entity, you would identify that corporate trustee as a reportable legal entity, so it's because it's a Cayman Islands vehicle. However, the other interesting point that the guidance made clear is that where you do have a corporate trustee who is a foreign entity, say a US vehicle that's acting as trustee, and you are identifying that trustee as a beneficial owner, you would in fact report that corporate entity. So it's the only situation, or it's one of very few situations, where a corporate entity or a non-individual entity that isn't a Cayman Islands entity is going to be named on the beneficial ownership register, so foreign corporate trustee. You would also need to identify a contact person within that foreign corporate. So that's all set out in the guidance, and I think that made it abundantly clear what you need to do there. The other thing, which was finally put to bed in terms of the final version of the regulations, and it's also set out in the guidance, is the concept of a majority stake. Now, our listeners might recall from our previous podcasts, we didn't quite yet know whether or not the concept of a majority stake test would live on in the new regime. By way of reminder, the majority stake test is relevant when you're looking at indirect interests in a legal person that you're identifying or you're analyzing for the purposes of the beneficial ownership regime. It effectively asks, does the person further up the chain have a majority interest in the next level down the chain? If they don't, then the test has failed and you can't identify a beneficial owner through that chain of inquiry. So obviously a very important test for identifying indirect beneficial owners. That's now set out in the regulations. It's mostly unchanged from the version of the majority stake test that we had in the prior version of the regime. So that's good to see, because I think taking that out would have caused a lot more work to do in reanalyzing structures. So that was good to see that.
Cool. No, I'll stop you there, Donnie. You've been going for a fair bit, fairly passionate about it. Just in terms of next steps, so for us and for our clients, Alex touched on the approach that we're going to be doing quite shortly, connecting with clients, but just what does it really mean for the clients and what they need to do?
Yeah, the regime commenced from the 31st of July. The old regime fell away immediately. Technically, all filing of beneficial ownership information has ceased as of the 31st of July. So there is no information at the moment being filed with the registrar. The ministry will, at some point in the coming months, notify industry that filing can commence again under the new regime, but we're not yet at that point. It still remains the case, though, that the 1st of January 2025 is the first date from which enforcement under the new regime can comply. What do we need to do in advance of that 1 January 2025 date? Number one, all legal persons who are in scope, so basically all Cayman Islands entities other than trusts, need to provide a written confirmation to their corporate service providers. In that written confirmation, it needs to identify who your registrable beneficial owners are and provide all the required particulars with respect to those individuals or entities. So that's the written confirmation. As Alex mentioned, we are going to be reaching out to all of our clients in the coming weeks to obtain those written confirmations and ensure we have plenty of time in the background to ensure all of our clients can be in compliance by the 1st of January. From a funds perspective, obviously there's that additional overlay. There is that decision to be made. If you are able to take advantage of the alternative route to compliance, as Alex mentioned, it's not mandatory. You have the option to opt out of that alternative route and treat yourself as properly in scope. So that's the first decision to be made. Depending on that decision, will influence what required particulars you provide and how Maples will necessarily assist.
All right. Perfect, everyone. Thanks very much for the contributions, Jen, Alex, and Donnie. Apologies, this podcast has gone over the time that we normally spend, but obviously very useful podcast, and I think it deserved the additional time. Thank you, the listeners, for listening. As always, we will be back with you on around 15th of the next month. So please stay tuned, and thank you again for listening.